Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. We're going to get the lowdown now on inverse bond ETFs with our ETF strategist, Eric Dutram, who joins me. Particularly timely topic this week because of the Fed meeting. And because of the Fed meeting this week, once again, investors are focused on interest rates and what's been happening in that market lately.
Well, just this talk of tapering has really had a huge impact on 10-year bond rates. Rates have moved up from about 1.6% to current levels around 2.2%.
Yeah, so not really that good, right?
Exactly, but it's still a pretty big change just since May 1st. And this has had a huge impact on everything from dividend stocks to especially bonds.
Yeah, and here we are on June 19th, so that gives you the time frame reference, May 1st to June 19th. That move has taken place.
Right, and that's obviously a gigantic move, and it's had a big impact on a number of interest rate sensitive securities, such as long-term bonds and TIP securities, because interest rates have moved higher, but inflation hasn't really kept up, so these are kind of losing some of their appeal as well. We've seen TIPs go down by about 4%, and long-term bonds lose about 6% in longer time periods. So it's been a pretty big, not a huge loss, but it's something bond investors really haven't seen in a long time. So it could be kind of a shock to investors out there.
So that's the impact on the bond ETFs?
Right.
Okay. Are there any ways investors then can win with higher rates in bond ETFs?
There are a couple inverse bond ETFs out there, and these actually do well when rates are increasing. So these could be very interesting plays for investors in this kind of rising interest rate environment. And a couple choices we have in this space. One is TBT, and this offers this offers 2x exposure, so 200% of the daily move in long-term bond markets. And it has great volume, millions of shares a day, so it's a pretty liquid product. So there's no real concerns about getting into or out of this fund. And it's added about 5.6% in the last month. So it's been a pretty strong performer, especially if you compare it to the some of those regular bond ETFs and how they've done in the past month.
What about this triple leverage ETF business that I've been hearing about? What's that all about?
Well, we've got a couple choices in this space for long-term bond investors. First up is TMV, and this fund has 3x exposure on a daily basis. So if the bonds go up, if bonds go down 1%, this goes up 3% in a day. And once again, this resets every day, so you only get a one-day benefit out of this product.
So it's an inverse relationship.
Exactly.
Okay.
And this is a little less liquid than its counterpart that I mentioned earlier, but it's added 7.7% in the last month, so it's been a really strong performer in the time period.
And that would be why we're talking about inverse bond ETFs.
Exactly.
Because the inverse relationship. Oh, I think I'm catching on now. And you've got another one too?
Exactly. This one also has a triple inverse focus, but it resets on a monthly basis. So basically the difference here between the previously mentioned fund is that you get less of a rebalancing issue, so it's a better for long-term investors. Although if you get into the middle of the month, you might not get that full negative 300% rebalancing. So this one also gained 7.7%, and once again, it's been a pretty strong performer. And then if you look, I have a nice chart here of the past 6-month performance.
Yes, it is very nice.
And as you can see, on about May 1st, we've seen a huge divergence between the inverse products, which are the ones that are all up, and the regular bond ETFs, even if they're triple leveraged. These have all gone down almost 10, 15, 20%. So it's been a pretty big shift in between these two types of products over the last 6 weeks or so. And if you think this trend can really continue for rising rates, the aforementioned bond ETFs could be great picks going forward too.
All right, so then how does this compare over the longer term?
Well, for the 6 months, as you can kind of see, if I quickly go back to this chart, it's been a little more dicey for these triple inverse leverage products.
Yeah.
Once again, it's really all dependent on interest rates. If Bernanke if it looks like the tapering issue is going to take a little longer to take place, these funds might be big losers over the next couple of weeks and months. But if you really believe that bonds are going to keep falling and interest rates are going to keep rising, these could be some interesting, but it's very important to note high-risk products to look at in the next coming months here.
Yeah, so maybe don't look too far ahead until you actually see how all this plays out.
Definitely.
With the Bernanke speak that
exactly
come out this
taper
week.
tight walk.
Yeah, that's right. That's right. Do you own any of these ETFs
I
you
do
talked
not.
about? Okay. Well, I'm glad we cleared all that up. Take a look at other ETF stories, articles, interesting information in the ETF section of Zacks.com. If you're watching this video out in syndication especially, get on over to the homepage, Zacks.com, and scroll down to the ETF module near the bottom of that homepage, and all of those story links will take you right to that section of the website. With Eric, I'm Terry Ruffalo.